Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just wanted to briefly go over our momentum pools, which of course I did outline last night, so there's no real reason to update them or anything. They are still fresh for the day until this afternoon when they will be closing and a new day starts. But as you can see, we started the day kind of sinking inside of the alpha momentum pools, and we have, just popped up for a little bit of air, basically trying to capture some liquidity. We never closed a 4-hour candle above it. I mean, we just kind of poked our head out of it and dipped back down, so not spending much time at all. We did tap the bottom. We didn't close a 4-hour candle, below there, and so we are just swimming around in the middle of it. And of course, what we want to see is to get above 20,630 and preferably 20,830 in order to really signal some bullishness, right? Guys, we did actually just pop up to 20,830. So it is definitely possible for Bitcoin to do it, but it does look like that was a liquidity grab and that it's exploring the bottom of this range. And what you will be, noticing quite interestingly is that these alpha momentum pools did capture the full range of this price movement incredibly accurately, with a wick here and a wick here, right at my bullish and my bearish levels. So if you have any doubts about this system that I'm developing, just understand that it is highly effective. We are getting major wins off of it. And of course, we did get a nice 30% gains off of Ethereum just the other day, thanks to the good old alpha momentum pools. And so please pay attention to these levels. If we do end up closing underneath this box, then there is a high likelihood that we're losing our momentum to the downside. Of course, if we do get just a nice bounce off of here, probably that's going to be in the favor of the bulls, and the 2 to 5 day projection does allow us to just swim around and take our time to get up there. So, we're going to have to watch out for that. Now, what could intervene is if the Federal Reserve comes in on Wednesday and just does something kind of crazy like increasing interest rates by 100 basis points. That would just slam us down. If it does 75 basis points, probably the chart is going to play out, probably with a little bit of a bias to the downside. Just my thought. And if it's 50 basis points, probably that will be in the Bulls' favor. Now, guys, just for a little bit of truth in advertising, I did want to go over the DXY because I was warning you about this high likelihood of a pullback as early as several days ago, in fact. So if we go ahead and just take a look at this, this 10-minute crypto update, basically on October 28th, 3 days ago, you can see what I was saying. In terms of risk, I would say the DXY, in fact, is putting in a completion of that inverse head and shoulders that I was talking about on my Twitter. And also in the Discord, if you guys are in the group, you can see that I did mark out the possibility for this inverse head and shoulders here. And that would have a measured move all the way up to here, all the way up to 111, perhaps 111 and a half, where we do see this naked candle up here. And so there could be some type of a liquidity grab by the foreign exchange traders. Now, as the dollar pushes up, right, that would put pressure to the downside on stocks and crypto. So just watch out for this, because essentially what we've done is we've created a head and shoulders. We retested this line, we broke out of it, we retested it as support, and now we're starting to build some support, and we could see a pop up here to the measured move, okay? Okay, guys, that was just a review of the video I made 3 days ago. And of course, what do you see? Boom, guys, just boom. We are absolutely killing it over here at the Alpha Commission. You can see that the head and shoulders that I plotted out, the retest of the underside, the retest of the breakup, and then, of course, the pop just perfectly executed. And so we were well warned on this move. And if you were in any of the plays that I've been talking about over the last week or two, then of course you did have this warning 3 days in advance, 3 days ahead of the rest of the market to go ahead and take your profits when you can because of the risk here. Now, I'm on the 4 hour, and we do see a little bit of a bearish structure here. Normally, these things do tend to pull back when you see this type of a setup, and so I'm not convinced that this is going to hold. This may have just been what I said it was likely to be. Look at my red box, just like perfectly where we went to, right? Uh, this may have just been a liquidity grab before continuing our way on the downside. But one thing that I do want to warn you about is that if we throw on our EMAs onto the US dollar here, and by the way, the US dollar is relevant because when the US dollar pumps, everything else dumps. And the reason why that is because everything is traded against the dollar. You pay in dollars, right? And so if dollars become more valuable, then people want to keep their dollars. They don't want their assets that are risky that maybe could dump on them. They like the dollars that's increasing in value, right? And so, guys, that's why when the dollar pumps, everything else dumps, and that's why we watch the US dollar. So as the dollar is pumping here, it is risky. If it does have a pullback, that means maybe we can end up getting bullish again on Bitcoin and stocks, things like that. But as long as the dollar keeps going up, that's risky to us. So that's just context for what I'm about to show you, which is, of course, that every time that we've gotten ahead of the 200 on the 4 hour on the US dollar, this has been bad news, okay? I mean, for the markets, you can see it grabbed the 200 and boom, it had a nice spike. Grabbed the 200, which is the orange line, boom, it had a spike. 200, boom, 200, boom, 200, boom, right? And so, guys, this 200 EMA on the US dollar is no joke. And although people are trying to do technical analysis on this thing, just remember that the US dollar is a political tool. It's not what you may be thinking in terms of a trading asset. I know in Forex, usually they trade extremely technically. And so, yes, if the politics isn't there, then absolutely, it's one of the most technical things that you can trade, right? But the politics, and this is going to be related to Jerome Powell's decision, the Federal Reserve's decision on Wednesday, on November 2nd, as to whether to increase rates or not, and by how much, is going to determine whether or not the dollar pumps or sinks. And so it is really just hanging out at this 200 EMA on the 4 hour, where it likes to just skyrocket off of, okay, which would just dump markets. And so as long as it's being situated there, we are at risk. Okay, we are at risk. What you want to see is the dollar breaking down from that 200 EMA on the 4 hour. And guys, don't question the EMAs on this. Like, it's pretty solid, okay, in the historical data there, especially since this recent epoch of Fed interest rate increases. And so if the dollar holds above that 200, I'm going to be fairly concerned. I'm not really so concerned about the support and resistance lines as I am about it getting above that 200 and how it's been traded above that 200 for just months and months and months. Of course, this is a bearish structure, as I suggested, and so if we do see the dollar breaking down from that 200 EMA, then I will feel a little bit more relieved. But this is a fairly bullish posture overall on the dollar. And so, what is the level that we're going to be looking for? Basically, seeing if it can get over 11.50, seeing if it can get over $12. If we're seeing it back in the $12 range, most likely it's even grabbed onto this diagonal and it's gone back onto trend, in which case it would be putting in an accumulation wedge, which would suggest it could go even dramatically higher. So just watch out, okay, guys? This isn't a fake out or whatever. This isn't market makers, blah, 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 guys. Like, this is no conspiracy stuff. It's just what's the U.S., federal, what's the Federal Reserve's policy on the dollar? That's all. What are the interest rates? Is it safer to have your money in dollars or is it safer to be investing right now? That's what the whole world is looking at, and that's what this chart is about. And then if we jump over to the VIX, you can see, that we are getting into a rather bouncy area itself, being on that 200 EMA on the 4 hour. Which it flirts with price action underneath there, which could be good trading because similar to the dollar, if the VIX drops, then trading tends to be better. If the VIX is rising, then trading tends to be bad. And so probably this is going to start rounding out. If it follows the past, it's probably going to be rounding out and then maybe popping back up. So if my point is only that it's also in a good area to start making a turn if the dollar makes a turn. And so you have both of these risk factors, potentially at play, where volatility could come into the stock market that just makes it not really great for trading, and then also the dollar could pop up, making dollars more valuable than the stocks and things that people want to buy with it. And so, guys, if we go back to Bitcoin, of course, we can see how that manifests in the charts probably more clearly if we take a look at some divergences. You can see that we do have this bearish divergence up here, but we were pretty much in the bullish control zone on the 4 hour here. It did drive us down to the middle, which suggests we could continue to fall down. And if I pop over to the 6 hour, then you're going to see that we actually have a drive of bullish divergence here right on our current movement. And so maybe that's already played out, or maybe it's going to continue down. But the key point is there's a fresh drive of bearish divergence that has built up over an entire week. Okay, so it's just something that you have to pay attention to. Remember, these similar types of drives are what pushed us up. So don't just ignore that drive down. It could be a doozy. So we do have to watch out for that. We do have to watch to see where Bitcoin closes, if it closes underneath my momentum zone, if it loses its daily momentum, and then also if it's losing, it's a 2 to 5 day projection of momentum that I've set up there for our convenience in terms of just forward thinking. This isn't guaranteed. This pretty much is guaranteed. And you can really see that interplay right now just doing pretty well. We are bouncing off of the essentially the 50 on the 4 hour. Pardon me, that's the 6 hour. Let's go to the 4 hour. Yeah, we are bouncing off of the 50 on the 4 hour. But we also have, one of these alpha 9 kind of knockout kind of crosses, like an inverted one going on, but with the 50, not with the 9. And so this could be just a gentle bump up while this bearish cross potentially takes effect. And so there is the possibility that this 50 is just providing temporary support because of how bullish this simple moving average is compared to the exponential moving average, the EMA versus the SMA. So we are going to be just on standby looking out for that. And guys, in terms of the stock market, you can see that pretty much everything that I suggested that would work out did work out. And now I do have some additional concepts in mind. Sorry for this big circle. I believe I was looking probably at the weekly, maybe. Yeah, I was pointing out that we could be having some type of kiss of death on the monthly here. Where if you guys don't know what a kiss of death is, then I'll probably do a Macro Monday follow-up on this. But there is a high likelihood that we could, pop up even as high as, 4,000. And if we get rejected from that area, this is what's going to be called a kiss of death. And, historically speaking, that's just not been very good. We did it here. And you can see what followed in the market after that. Okay, we did it here, and you can see what followed after the market in the market after that. Okay, and so just be aware that there is a possibility that we've only put in this top structure, and that we may have a monster ways to go down. And guys, I don't want to scare you with that in this episode because we are just taking this one day at a time on Bitcoin, but I don't hear anybody talking about what I'm talking about. So you got to hear it from someone that there is a tremendous risk to the downside just going forward. Now remember, that was the monthly chart, so we're only dealing with the 4 hour and the daily here with some type of projection for the week. So there is the possibility of bullishness, and of course if we push through that monthly 21 on stocks, then the kiss of death will be invalidated, and so there is also the possibility of upside. And we do have, of course, the next month really to figure that out. So we've got time. It's just on the macro, things aren't looking that great, and we are having a bit of a double top, as I mentioned in the last episode on Bitcoin. We do have that bearish divergence, and we are at the bottom of the momentum pools. So please just really pay attention to these levels, especially as the DXY, the dollar, is just threatening to recover that 200 EMA. And all of this is probably going to gel together based upon the decision of the Federal Reserve on Wednesday. And then after that, what is their next move in December? Because not only do we need to see what they're doing in November, which, to be honest, the market expects 75 basis points. But we also have to understand whether or not they are going to pivot in December, or if they're going to double down and go harder because maybe something happens, like just oil spikes back up or something like that. Guys, I don't want to be spending too much more time on this. We are getting a little bit of a bounce where you would expect. So we are retaining that hope. Since our momentum is to the downside today. I just, whenever we're in like the foggy area between the bullish and the bearish, if we're moving up, if our chart has been moving up, then I'll lean towards the bullish side. But if our chart has been moving down, then I'll lean towards the bearish side, unless it's proven otherwise, right? And so that just makes these lines even stronger, and it just makes recovering these lines even more important. And in between, I really wouldn't want to take a gamble. But if I was taking a gamble, it would be leaning towards the direction that our candles are pointing. Do you understand how that works? All right, guys, that's your alpha for the day. Stay safe and happy trading.